The pound US dollar, GBP, USD, exchange rate is strengthening after US inflation cooled further than expected, sapping demand for the US dollar on tempered rate hike bets. With headline CPI falling to 3% from 4%, the belief that the Federal Reserve could pause its tightening cycle after the July meeting is sapping demand for the greenback. At time of writing, the GBP USD exchange rate is around $1.30, an almost 0.5% jump from this morning's opening levels. The pound US dollar, GBP USD, exchange rate is trading narrowly in the wake of the latest US inflation data. Against expectations of cooling to 3.1%, headline CPI eased to 3%. The lowest level since March 2021. Core inflation, stripping out volatile prices of food and energy, fell to 4.8%, compared to predictions of a climb to 5%. Softer than expected inflation could see rate hike expectations from the Federal Reserve tempered, which could drag the greenback down. At time of writing, the GBP USD exchange rate is around $1.2948, relatively unchanged from this morning's opening levels. The pound US dollar exchange rate is range-bound this morning as US inflation is set to hit lowest level in 2 years. At time of writing, the GBP USD exchange rate is around $1.2932, relatively unchanged from this morning's opening levels. The US dollar, USD, remains quiet this morning as the market braces for the latest inflation data for the US. Expectations that headline CPI will slow to 3.1% from 4%, the figure edges closer to the Federal Reserve's target level of 2%. With hopes growing of the Fed to pause their tightening cycle after the next meeting, market sentiment is improving. However, core inflation, stripping out volatile prices such as food and energy, is expected to have fallen much more modestly, against predictions of slowing to 5.1% from 5.3%. The stickiness will remain a concern for the central bank. With elevated inflationary pressures lingering, further tightening could be needed, coupled with the labor market remaining so tight. Expectations of further tightening could be boosting the US dollar. Economists at Credit Suisse are warning that if inflation data surprises again, the greenback could plummet. A stronger than expected fall in inflation could see the Fed once again pause their tightening cycle after the July meeting. They said, a number that can be termed weak would allow the market to toy with the idea of pricing in no further hikes after this month. Compared to the roughly 40% chance of a further 25 bits per second after this month's hike now priced in. Meanwhile, the pound, GBP, is relatively subdued this morning amid a lack of economic data. Providing modest support, however, are expectations that the Bank of England, BOE, could continue raising the interest rates. The BOE released the latest financial stability report this morning. Governor Andrew Bailey gave a press conference reassuring the markets that the UK's banking system is strong enough to weather an economic storm. Despite soaring interest rates causing stress to consumers and firms, Bailey reassured investors the UK economy is resilient. Pound US dollar exchange rate forecast. Shrinking UK economy to weigh on sterling. Aside from US inflation data, the pound US dollar exchange rate could see movement with the latest UK GDP growth data. The latest report due tomorrow is predicted to show that the UK economy is expected to shrink 0.3% in May. As for the US dollar, the latest PPI data could see the greenback climb if forecasts prove true. An expected UPTICK in producer prices could indicate inflationary pressures have not peaked, which could see the case for further rate hikes from the Fed, bolstering the US dollar.